The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
Good afternoon, everybody, and another wonderful episode of the Power Trading Hour commences with your lovable and ugly soft host here, the koala bear of Wall Street. Anyway, we've just had a Fed notes out, the minutes. The minutes always take several minutes to read, apparently. I guess that's why they should be called minutes, not hours. Although some people, especially CNBC, will probably spend hours on the minutes. See what I did there? Yeah. So anyway, I read through very quickly, looking at the reaction of the market, and probably a few things that get us started on what the Fed is thinking. First is that most people thought that there would be a bigger taper than they did, but apparently the consensus, or to get a consensus, they lowered, or actually made the taper smaller, probably the best way to describe it. It looks like we're probably going to have higher tapers in the near future. They are betting on a budget deal, and they think that maybe because of the participation rate, that they're going to actually have to change the unemployment rate because it probably doesn't directly or correctly target what they're looking at. Their notes basically say that what they thought was 6.5% will now have to be 6%, and for the unemployment rate. But pretty much just a few things like that. But didn't look anything that would be very bullish. I had added two more shorts in my daily newsletter today, and one of my notes in there was my thoughts, and that is that interest rates are going to go slightly higher. 1/3 of all the S&P 500 stocks, their profits are based on lower interest rates than they would normally have at a floating rate, at least what the considered rate would be if the Fed stayed out of the picture. So, we could see a pullback in earnings of 1/3, and the economy could stay just where it's at. So if we're getting 2-3 points of GDP per year, but we take off 33.33%, because the interest rates float back to where they're supposed to be, we could see a great repricing of at least S&P stocks. It's hard to tell about on technology stocks and some of the others. A great deal of those need no cash whatsoever. Apple, it's got $150 billion. Microsoft's got $80 billion. I forget what Google has, but something like that, $70-80 billion. They certainly are trying to find a home for that money. But a great deal of the companies that are in the brick and mortar and manufacturing need access to capital, and a great deal of that money, like I said, is probably 1/3. Probably not going to see it in Microsoft or the rest of these companies, but high tech. But companies that don't have super high margins, think car manufacturers, that kind of stuff, probably going to see a great pullback in their valuations over the next year and a half, as interest rates go back to floating to their natural levels. Even if the Fed continues to push, my guess is that you're going to see those interest rates slowly melt up, and that will mean that profits will slowly melt down on the markets. Anyway, from what we've seen in the first splash out here, really couldn't hold the highs once again today. This is options expiration day, and as we look at expiration, what we want to be seeing on a day where option market makers go delta neutral is a lot of volatility. Normally, that is they thrash the market around. They sell puts and calls, pull back in puts and calls, buy the underlying to hedge their positions. And we're not seeing a great deal of that so far today. Maybe it'll happen in the last hour of trading. Did see a note actually also about just how much and how the shares of stocks are being traded and how little are actually being traded on the New York Stock Exchange or the NASDAQ or even ECNs. They've gone into these dark pools, and you cannot really, although they're supposed to immediately report all these trades, it looks to me like a lot of times they're sandbagging them for later in the day. But I can't prove that at the moment. But it just, you see all that volume at the end of the day makes me think that these dark pools that trade between each other, trying to avoid the high-frequency traders, leave a thinner and thinner market on the major indexes for us common, or as we're known, the little people. The little people that made it all possible. Anyway, volume out here as we go into the day, not unconsequentially a little bit stronger than we saw yesterday. I mean, just a tiny bit, going on about 2.2 billion shares, maybe 30 million shares more than yesterday at this time. So volume has started to pick up in the new year. Off a couple points on the S&P cash. Not a big deal so far, but we did go back up one more time to 1840 on the S&P cash, where we needed some fairly decent volume to break higher. We need probably 4.5, 5 billion share a day to get any kind of what at least we would consider a sign of strength. So, we've got a lot of movements out here. Gold is lowered today. And not surprisingly enough, I went through some of the reasons why I thought gold was going to at least have a U bottom, if not a blowout bottom. And I can't see that anything's going to change in that in the next few days, and especially as we get into the next couple of days. The question is whether or not we get a blow-off low into the next few days to the next week of trading in gold. I'm going to be watching it closely. I think we're going to have some kind of huge intraday event, and that is going to wash out all the week longs out of the picture and set up an opportunity to buy at incredibly low levels, I think, probably in the next, I'm thinking in the next 7 to 10 days. But I think a lot of it has to do with how the market reacts to the Fed minutes today. Not a lot of movement, which is normally very rare for a Wednesday, the week before options expiration. It makes me think that we're probably pretty much set up exactly as the option market makers believe, and that is that we're going to have about a 35-point pullback into a week from next Friday. Of course, we're going to start seeing many stocks start with earnings early next week. I think the next round starts on Monday night or Tuesday morning. I'm going to start looking through that tonight. But we are going to have some stocks with earnings. Some of these stocks are going to be bigger and going to be able to move markets. But at the meantime, I've got 65 or 70% of my portfolio short. I'm going to leave the other 30% ready to buy some gold maybe. And if not that, maybe some additional stocks that get ready to roll over if we have hit a high here. Most of the ones that I've set up already we're doing fine on, and nothing that's more than 1% or 0.5% out. But pretty close to where they should be, and a lot of them have kind of rolled over already. I think we could probably start seeing that a bit more. Everybody's talking up like there's no end to the sight of how high earnings are going to be. I think that at least some of this cold weather is going to get a lot of consumer stocks warning, and I think we've got more than a few of those next week. Again, I'll probably handle or talk about stocks and earnings tomorrow after I go through them tonight. Been doing a lot of work on options, and we'll be talking about that more in the show. Today in financial history in 1829, early on in the stock market, it was the quietest day of all time in the stock market. They had not a single share of stock trade hands. That's been a long time ago, but kind of a if we had a stock market, no one showed up. But kind of on the early days. By 1987, 14 years after it had crossed the 1,000 mark, the Dow Jones Industrial Average broke the 2,000 barrier, closing at 2,225, and that is in 1829 and 1987. So we've got a little bit of history going on. We've got a question about MU. We will talk about this in probably the next segment here. I think we're just down to a couple of minutes. They had a nice little move out here today, and we will show that. In the meantime, one of the pundits that makes the trip around Bloomberg and CNBC, Bob Dole, was talking about some bubbles. Bubble. That's my bubbles montage. Anyway, he had a few ideas. Of course, this guy, I don't think he's ever seen a bubble, but he did have 3 points, and that is bubbles can come from any of three, but mostly when all three exist at the same time. That's excessive valuation, excessive ownership, which we do not have now, and excessive leverage. And I suspect we've got two of the three. We certainly have excessive valuation. Even Wall Street is talking down stocks like Twitter. Excessive ownership, we have not seen the retail trader come back. Basically, this is the 401k market where workers' money is going in to ETFs. And then we have the excessive leverage. I suspect that's been made by the incredible easy money policy. So I think we've got two of the three. If we had three of the three, I'd be talking about the end of the world and an S&P 500 and dogs living with cats. Real wrath of God stuff. You like my reference there to Ghostbusters? Anyway, when we look at this, really looking at these three things, but I think we have two of the three things, which makes me think that we've got a good opportunity for a major pullback in this market. And major means that could we see a 300 or 400 point move over 3 or 6 months? I think the answer is yes. Will we get it? Probably 50-50. I think the Fed would step in if anything huge started to move. But I think we are going to see the deleveraging of the stock market based on easy money policies from the Fed. And we'll be back in a minute. We'll talk about MU and memory. Memories. Do 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 do.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we had somebody in the den ask about Micron technology. I actually covered them a bit in the Tech Insider on Friday. What we have is a company that makes a commodity device. It is memory. If you're not familiar with how memory is made, you basically have somebody like Intel and probably Micron and SanDisk, and they all get together and write off huge amounts of liquor. Probably in strip clubs in Las Vegas by getting together in cadres, and they come up with a spec for memory, whether it's DDR3 or DDR5 or something like that. They'll come up with a spec for a particular kind of memory, whether it's non-volatile or volatile RAM. They'll come up with ways that it's made. But there is a spec that is written for memory. They make to that spec. There isn't a lot of mystery, and there isn't a lot of how do we do this. It is a commodity chip business. So what happened at Micron, and why are we seeing them up at these levels? A couple of things. One, we had a company go bankrupt, Elpedia. Micron has finished taking them over. Probably not going to be doing much with what they have. Micron kind of likes the shortage that Elpedia going bankrupt and out of business had. There's also yet another company in China that builds commodity memory. they had a fire. So we had a confluence of events, oh boy, I hate this term, a perfect storm in this arena. And then we're going to have additional things happening this year. What is it, April 7th, April 10th? Again, I covered this on Friday in the Tech Insider. We're going to have the last day of Windows XP. There are going to be a bunch of machines. They've got, 450 million licenses, of which I think 20 or 30% are Windows XP, still floating around out there. Those folks will become easy prey, and you might as well just put open your front door and let hackers come in and have direct access to your machine, because Microsoft will not be offering any more security patches for their machines. This also means that the government, some other folks out there, will probably have to be forced into upgrading to either Microsoft newer Windows 7 or Windows 8 products, and maybe they do something else. But it's not going to hurt Microsoft. It can only help them. We've seen some articles over the last few days about Boston going to Google and stuff like that. And I think everybody's going to be happy with that until the first day that someone goes in and downloads everything from Boston and hacks all over their computers, because it's with these cloud services, it's you kind of get the if you can get the camel's nose under the tent, you got all the data, not just Boston's, but you may have every city in America that deals with Google, and I have a feeling it's just a matter of time before someone gets their nose under there, whether it's the NSA or some smelly kid that's 16 years old, doesn't take enough baths, lives in his parents' basements, and really needs a lot of acne cream. But you can't stop highly motivated individuals. But what we're going to see is a decent upgrade cycle this year. It is going to be forced on people. Microsoft is basically, after 4 times of being goaded into continuing to support Windows XP, has said, this is it. We're not going to do it anymore. It's over. And I think we're probably banking a little bit of that business in Micron's price already. I think we could have seen the high price in Micron. I expect it to go sideways for a while. Could be even a year and a half. Could we get higher in this? The answer is yes. I am wondering just how quickly the plant that had the fire is going to be online. I've heard rumors anywhere from a week from today to 3 weeks to today, but certainly by the end of the month, that plant from China is going to be back into full production, and we're going to see a lot more memory chips back here on the marketplace. And especially with Micron, they're starting to act like they're going to make deals with China for fab and fabricating. I don't like that on their part, but we'll see it. But Micron probably at the very high end of its price, but trade it like gold. It's all about supply and demand for easily obtainable memory. Be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And as we come back, the other side of MU is SanDisk. Of course, they both make similar products. SanDisk actually has a retail branch of their products, where Micron only sells to resellers for the most part. But SanDisk, the brother of MU, and SNDK is the symbol if you're not familiar with it. Pretty much the same thing, except they do push their own product line somewhat. But it's doing this similar thing today. It's breaking up through its previous high. Volume is good, 6.8 million shares compared to the previous high, last high, October 29th, that had 5.5 million shares. You could almost say that we needed to get through this one that had 13.6 million shares back on the 17th that set it up. We've gone back through it, but I think we've chewed through it enough times that we're good, and I'm going to say that this is an adequate sign of strength. But like I said, I think we're probably up at the very highest levels of valuation for both SanDisk and MU, and we're probably seeing the swan song up here. Both of these stocks heavily owned by funds, and I could see that they will keep this up into the huge moves of people moving and buying new machines over the next year and a half. So probably more of a trading range in these stocks, and I suspect we're probably going to see in the next year wide distribution as they get out probably at the strongest levels for memory demand. And again, these stocks trade like gold. They trade like silver. It's all about supply and demand and what can we get. And look at that. Of course, we are talking a little bit about gold. I said we'd bring it back much up. Looking at GLD back here, starting to take the stair steps back down. And a lighter volume today so far on GLD. But I'd love to see this thing at least come back down to 114.46 one more time. We've had a light volume there, but we may need to base out. One of the codicil, I wouldn't call it a codicil, corollaries. Think a corollary that some of the people I traded with in the past would say is that there is kind of a time frame that it takes for stocks to repair and to break and build a bottom in a marketplace. Normally commodities, you'll see a lot of V-shaped. We saw natural gas go sideways for a number of years before we started to see a lot of life. And actually, you could still say it's doing that. We're getting warmer temperatures today. I didn't even look at UNG. I'll get a chance to. What do we have down here? It's off 49 cents. Not surprisingly, yesterday, day before, I said we were going to get warmer days here. And I'm going to sneeze yet again today. Well, that was 5 sneezes in a row. But every time I turn that heater on, it starts blowing dust around a little bit, and I have to sneeze just a little more. But as we're looking at these charts in the GLD, it will not surprise me if we, one, test the bottom, and two, if we have a spike that washes everybody out in an intraday reversal. One of those two things could happen. Both could happen. I don't think anybody buying gold down here is going to be hurt. You tend to want to buy at the cost of production, and Tom has been gracious in letting us know that it's not very far below what we have here. But you sometimes need to get a few mines closed, a little bit of supply in the market. I still have not seen the ripping and tearing of clothes and the gnashing of teeth and the wailing of women in the street about the price of gold yet. And I think, the first time that I hear someone talking about gold in the bar while I'm waiting to go into the restaurant, or the incessant discussion about it on CNBC, or the total lack of discussion on CNBC, one of the other ones, will probably be a little closer to it. But I can say, just like a pot that is waiting to boil on the stove, the harder we look at this, probably the longer it will take. But we've had a fairly decent run back down here, and I wouldn't be surprised if it took up to a third of the time that it took from this last major high, at least on GLD back up here in October 28th. So if we had, 2 months, 2.5 months, could it take 3 weeks to base out at this bottom? And the answer, I think, is yes. It certainly could. It could take longer than that. But I think the longer that we stay down here, the more that we wash out these folks, the more money we're going to make on the other side. And again, I don't think it's that far down. But we may have that scary day, kind of like the day that we had a mini flash crash the other day caused by a giant order. But what can you say? JCPenney out also. Someone knew something last night. Within 15, 20 minutes of the close last night, someone bought the equivalent of 12 million shares in puts for this morning. Those ranged anywhere from 20 to 30 cents. They were worth $1 today. So someone always knows something. Of course, decent volume today. Certainly looks like we're going to go back and test this $6.24 range. And every one of these stocks, once they break under $10, the whole thing is how long can you keep them up while you have these big funds sell. And, of course, if you are somebody, a stock operator, you believe in JCPenney, you want to wash all these guys out at the lows as you buy up shares. If you think that they're going out of business, you want to be distributing as much as you can. So you talk to the CEO and say, hey, we know that there's no way in hell that you're going to get this company back on track. You're going to go out of business. You're in older malls. Several of those older malls are going to close, even cutting off more business to you. Help us out and we'll help you out. One hand washes the other. Starting to get it? You wet my beak, I'll wet yours. So they tend to get a new CEO in there, and they pay him a lot of money to go out there and impress the flesh and tell everybody how good business is. They said that last night and promptly got whammicked this morning. Is that even a word? Whammicked? Whammied this morning. But we're just down in this gap. Certainly looks like we're going to go back and test 624. But basically everybody knew what was happening. They were offering huge deals to get people in the store. They can turn a lot of actual merchandise, but they're not going to be making any money. And that is their problem today. VMware. As we look at some other stocks moving out here. This is a pattern that I've seen a lot in going through stocks over the last couple of nights, and that is we're back in to the very end of testing these higher here. Polar, look here. A million computers in a bit point. Yeah. I've seen that before. That's been around for a few weeks. I'll talk about it in a minute. VMware. Of course, we talked about how this company had bought a very small company in Israel about a year ago, and I wanted to buy this thing. I just never, ever got the signal that I wanted to buy this thing. Basically, the signal came with a giant gap up and even higher volume on the second low. I never could buy this thing. The chart just never did it for me, but I certainly liked the company they bought. That company was did software work in virtualizing routers. So going into the Cisco business fairly strongly, but especially for cloud services meant that you could work and re-engineer via software vast amount of router and configuration tables that you couldn't do with hardware fixated routers. Anyway, they wrote specific software for that, and along with their VMware for virtualizing servers, made it a huge deal. This may be some of the best working software out there that you've never heard of. But basically, you can take a single server and make 100, 200 servers out of it, depending on how you want to divide up the processor pie. We work at TFNN with several what they call virtual private servers that use this kind of technology. It's not new, but pretty much saturated for their business. VMware has done very well and back up into these. But what we have seen is moves to go back and fill these gaps, which is what I wanted to point out. This one is just starting to finish its gap. And that gap came down on almost 28 million shares back on the 29th of January a year ago. And we're coming slightly back up in there. Of course, yesterday, 4.4 million shares, 1.4 million shares today. Just not going to get a lot. That's why I'm thinking we're probably in an upper trading range in a lot of these stocks, but certainly could start pulling back in many of them. You can always give me a call at 877-927-6648. And, I think that the virus, Yahoo virus thing is a couple of weeks old. There were several other viruses floating around to convert millions of computers into Bitcoin mining slaves. Unfortunately, PCs are pretty bad at doing the work that you have to do to mine Bitcoins, and even with the hundreds of thousands and millions of computers they got, they didn't get very far. And if I remember right, the guy that wrote the virus has been arrested and is in jail without bond. So he's probably going to spend a couple of years waiting around for his trial to get 5 to 7 years on the backside of that. So I don't think it's just like anything. If you don't have your computer with the current patches and decent software, I recommend Avast, probably the best one out there, and it's got a free version that's more than adequate. I use the free version, and I haven't had any problems. But I update all my patches every Tuesday for Microsoft, and I keep a fairly decent eye about what's going on. I separate my trading computer with computers that I allow access to the free world, so that I don't have the twain meeting. But computer's pretty cheap equipment for trading. It's the capital that costs. So I don't mind spending money on computers. But anyway, looking at VMware, I wanted to look at some other ones out there. C-Trip is the biggest loser today. CTRP, biggest loser on the NASDAQ 100 right now. Was it off about 3.5%? Looking at this thing coming after its last major low that had 3 million shares on November 26th, we're seeing that pretty much tap through that today with 5.2 million shares. It's got a big honking gap up on heavy volume, so you're probably going to find support somewhere around that 39, 38 area is where you might want to take a look at this if it comes back and able to have a nice lows. But again, probably going to base out a while before some of these set back up for the next move up if we are so lucky as to have one. Yeah. Yes, separate machine from my trading platform. What else do we have going on in play here? I want to see what else we had. Got a few out here. FRX acquired one of its competitors for $2.9 billion in cash. Expects to be accretive in less than a year. Thing is breaking out with huge moves, and of course. Buying up at the highs here, not anything new for this company, but they bought can't even say it, a palace. Hang on a second, let me dig that up. They are a company providing innovative, effective therapies for unmet medical needs. With focused, let me see what else it is here. Cystic fibrosis and gastrointestinal disorders. So they've got a couple, 3 or 4 drugs in the pipeline, and that's all anybody needed to know at Forest Labs. Of course, most of these companies are at the point where the only way they get bigger is by eating other companies. So we'll be back, look at a few other companies moving. Core's still down today, moving down, and we've got some others moving. We'll be back in just a minute.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Another segment of or sector in the markets that's kind of interests me at the moment are these these for-profit education companies. Apollo is one, ESI is another. To me, we're probably looking at a lot of these stocks blowing out the last of the shorts, left all for dead because the Congress cut off most of the free money they had for these online computer courses and things like that. And they're basically junior colleges, but a whole lot of more money. They've got some of these funds back and going. I think it's only a matter of time before we see Chapter 2 of the exact same thing that happened before, where we find that bums and other people are signed up for $40,000 tickets that never go to any of these colleges. But what we are seeing today is that it really couldn't hold the highs, at least on Apollo. And one I was looking at last night ITT Educational, probably much better. It's not the giant fraud that most of these for-profits are, but even it looks like it could be making a ABC down to me. Or, if you're looking at it, it could be an ABC up, but not a lot of energy in this last move. I actually like this other move actually out here, which is the October 29th is A, and the B is September 17th, and the C point is 39.32 today. We give you a 0.66 or 66% retracement that it couldn't hold. It's back here coming up against what looks like fairly decent resistance level right at this $39 level. But could have a nice ABC down that would take it back down to the $28.93 level. And my guess is that they're going to get right back on these guys again as a lot of this money is slushed back in through the politicians. But it's tough to go. Anyway, we got a couple minutes left. I wanted to look at Royal Gold, see how some of these gold stocks are actually participating. And, it's not all that bad. So, could we get one more test of that low down at $42 in Royal Gold? I would sure love it. I've been very patient. I wanted to buy gold not for a trade, but as a long-term investment. I think we're probably going into the last fifth leg of gold. That will last very long, and it will be on light volume. It'll be one of these markets that is very tough to buy and very tough to hold. And if you've got the courage of your convictions, the fifth leg of a pattern can be hugely profitable, but they tend to be slow and very steady, up a few pennies or half a buck or a quarter or a dime, but they tend to be extremely orderly. So far, we haven't had that with this leg. So far, it's been kind of a little bit of an S leg here off the bottom for Royal Gold. One of the things that made me think we haven't started that last fifth leg up, and we'll see it. Will it close the gap? I don't know. I think that with cost of production down there, it's going to be awful hard to get it, probably gold below 1150, and I think a lot of people are already looking at some of these companies like Royal Gold, but not a lot of strength coming into selling today. So it looks good, but I'm still hoping for a blowout to buy gold. Anyway, we will see you tomorrow. Same bat channel, same bat time. And remember, sell when you can, not when you have to.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.